Hey, my name's James Nicholson and welcome to my YouTube channel. It's good news, interest rates are down again. In this video though, I want to talk about more. I've been watching the Bank of England press conference. They talk about Donald Trump, what that's going to mean for the British economy with the tariffs that are potentially coming out. They talk about Labour's budget. What's that going to mean for employment? What's that going to mean for the economy over here in the UK? Are mortgage rates going to drop? The fact that the base rate dropped, does it mean that your mortgage will get cheaper? For some, yes, for others, no. So I'm going to cover that in the video, and there's much more to dissect here as well. Now, if you're new around here and you haven't watched this channel before, do make sure you subscribe to the channel over there and hit the bell notification. We've got new content every day on interest rates, house prices, investing in property, and much more. And let's get more viewers on the content by smashing like, tickling like, doing something to that like button. That really helps with the YouTube algorithm and it helps the channel grow. So thanks to everyone that does that. So, a Bank of England meeting and the rates were cut as expected. So the base rate went down and it went down from 5% to 4.75%. I've made two videos this week where that was what I was expecting. That's what the markets were expecting. We were hoping for more. I was hoping for more. I want rates to come down a little bit faster, but this is where we're at. And so the Bank of England, they are talking about quite a lot of stuff today because a lot's happening. We've obviously had a very major budget in the UK. In fact, probably one of the strongest budgets that we've ever had. And we've also had a shock. Maybe you don't think it's a shock. Some of you don't. A Donald Trump win. So a lot of people are having to revise estimates on what they think is happening off the back of that. So what was the vote on this? So there's 9 members of the monetary policy at the Bank of England, and it's interesting to know, we talk about this each time they do a meeting, what the vote is, because it gives you an idea of where we're sitting. So the vote for this one sat at 8 wanting to cut to 1 wanting to hold. And we kind of saw as we got towards that rate cut in the UK that we did see the few months prior we had, it was probably a 5-4, some of them, a 3-6 on some of them. We saw that. And even when we did cut rates, it wasn't a 9 people all agreeing on that. So right now, we've got 1 person that felt that we should hold and 8. So the majority of policymakers there felt that the right time was now and we needed to cut rates even more. So let's talk about the budget, because they talked about the budget. Now, the Bank of England try not to be political. I know some of you might find that funny, but they try not to be political. And they're saying this budget is going to be inflationary. They're pretty confident that putting up national insurance, putting up all these taxes, putting up, for example, the minimum wage, those are going to be passed on to us. So a lot of things that are in the basket of goods for inflation are food and drink. A lot of those places have people working on minimum wage. So they will pass the costs on to you. So Sainsbury's have already said that, I think today they said that the budget is going to cost them around 150 million extra in costs. And they have shareholders. They're just going to pass those costs on to us. The cost of food and drink is going to go up for sure. And so that's what the Bank of England agrees. They're agreeing with places like Sainsbury's. They're saying that these costs will get passed on to you and to me, and they feel that it will add 0.5% to inflation. So we're at 1.7 now. That would make it go to 2.2. So it is not insignificant, the amount. And so that's important to understand. So they're saying the national insurance and the minimum wage are the main contributors to inflation from the budget, which is frustrating. Obviously, we want to get this inflation done, dusted, and talk about something else. Next, they talked about oil and gas. That's been quite fortunate for us. The oil and gas prices have been lower than expected. That's why we went to 1.7% on the inflation figures last month. And that really did help. So that was good, and they're not going crazy at the moment. What have we got to watch though? The Bank of England said specifically where they're worried is service inflation. So they're worried about things like the cost of flights. They're worried about any business that is a service-based business, like accountants, like builders, those sorts of things. They really want those prices to drop or to stop rising. That's the main area of inflation that they've got real concerns over, is the services. And they've said that for months. Like in all the meetings, they've been saying services, services, services. In fact, last month's probably the only time that I don't recall them talking about it. For a year now, they've been going on about service side inflation. With regards to rate cuts, and so mortgages. So on mortgages, obviously, that's all we really care about here when the base rate drops is it going to hit our mortgage? Well, 600,000 people right now are on a tracker mortgage, so they will immediately get cut, so that's good. But that's a tiny percentage of people that have a property. And so what we're saying here is that the Bank of England and a lot of places are agreeing in the press coverage that's already out, you're probably not going to see a drop in mortgage rates. I've searched, nobody yet has done a drop in mortgage rates. Sometimes they do straight after. And I also said this yesterday, nobody cut their mortgage rates before the budget. Often they will do that as a marketing stunt when they're certain, when they know the Bank of England is going to cut rates, which pretty much everybody did know. The banks have been hinting at it all month. Then you will get lenders that will just cut the day before because they get all the publicity. Sky News, The Sun, The Guardian, the Daily Mail, all these places will talk about it. It's free advertising. Whereas if you do it today, you get mixed up in the news cycle with the Bank of England cycle. But no one cut yesterday. No one so far that I've seen has cut today. If you do see anyone, do comment below because I'd like to check them out. I know a lot of you come here for that kind of news. So mortgages, if you're on a tracker, you've got an immediate drop. It's not looking great for anyone else dropping at the moment. In fact, some people are saying that potentially mortgage rates might continue to creep up. And that's because the banks like HSBC, NatWest, etc., they borrow on a rate called the SONIA swap rate, and that has been going up recently. And so that's something that we've got to keep an eye on. I want to address that as well quickly because I've made some videos just to get total clarity here. If the base rate drops, it only drops your mortgage if you're on a tracker. What you want to actually drop is the SONIA swap rate, and that's the rate that the banks borrow off. When that starts coming out down, you can know ahead of time mortgage cuts are coming. So this was interesting, asked about Donald Trump. So Andrew Bailey was asked about Donald Trump. What does he think? He doesn't want to comment on that. So the question was rephrased. What do you think about these tariffs that Donald Trump has got on the way? Didn't want to comment on that either. Being very, very smart here. We know that we want to start as a government and as the Bank of England that have got to work with the Fed. They want to start on good terms. And so they don't want to comment on what they feel. However, he did laugh in a way that kind of implied that he doesn't think these tariffs are going to be particularly good if you watch that back. Next, this is not great either. Let's talk about this first. So inflation going forward. So they keep saying inflation is going to keep rising, even though it went 1.7 last month. They feel the expectation is that inflation will probably stay at 2% now until the summer, which is a revised forecast, which is better. And they feel that at the end of 2025, because of the budget and because of potentially what might happen in America, inflation will go back up to 2.75%. So that's what we've got to keep an eye on. That's their new forecast, is by the end of next year, inflation will be back at 2.75% based off the budget, increasing wages and costs, and potentially stuff that might happen in America. Now, this is the next part. There was always a forecast that the Bank of England would cut rates again in December. The language they're using is it's unlikely now. So no December rate cut likely. They want to take it slowly. They want to see what happens and have a meeting in between. So they cut in August. They didn't cut in October. There was no meeting in September. So one meeting, they cut, then they paused. Now they've cut. They're using language to imply that they're probably going to pause again at the next meeting in December, but we'll have to see what happens. So look, base rate's down. If you're on a tracker, good news. What we need to happen now is we need just some more certainty on what impact the budget has when the budget starts to feed into the market, because it's only just happened, although it's already been a week or so. We need to see, do companies start increasing prices? We'll start to get that data in the inflation data. That's what we've got to watch and see what happens. So interesting stuff. What I want to know from you is, do you think they will cut in December, or do you think they'll hold again? Do comment below. Do smash like. Do subscribe to the channel and check out all the other content on my channel, including this video right here.